What's up, everybody? Good morning. Goddamn early morning. No matter what, I'm always tired during CPI. As usual for these streams, we'll probably watch the rate announcement, see what happens, and then step away for about half hour, 45 minutes. Come back for the 9:30 opening. As of now, if we look quickly though, right, we're kind of consolidating heading into that as we would expect. Yesterday created relative equal lows here. And now this was that 1 hour fair value gap we were speaking about over the weekend, saying that we could still run into this, see if price could hold from here. And now we have this liquidity resting right above that. At the same time, we've engineered relative equal highs here, 1, 2, 3. So really, for this CPI, I don't have a hard bias on what I expect. If we're bullish, let's say, right, which we still are, then we may just go straight up, right? Because we, in theory, we've cleared all this sell side here. This is a new week opening gap. We've went into the new week opening gap. We've held that level perfectly. We're sitting inside a bearish fair value gap right now. So we may sit inside of this until 8:30, and then price will either, right, we may actually hold this setup, clear the sell side, or we might come up for the high. For me, I would favor, let's see. This is actually a pretty tough read this morning. I mean, it sounds kind of wild, but to be honest, if we do want higher prices here, I would kind of favor a run lower first. So people that kind of went in early yesterday, let's say, right, Monday, they're safe here under this low, on this whole run up. So although we have buy side here, I would like that as a target. It would be kind of nice to see price deliver into the opposing liquidity first, right? So we can pick up liquidity, run out Monday's low, create Tuesday low of the week, and then run higher. That's kind of would be my, I guess, best case scenario. Obviously with CPI, purely guesswork, right? We're not really trying to take a trade during it, do anything during it, but we can guess where we think price may go. So we got 1 minute inside of a 15. We're actually inside of 1 minute as well. All right, let me refine that to the 1. Place your bets now, higher or lower. What are we thinking? Lows. Relative equal highs that have not been touched. Time for the fireworks. We'll go to a 2 minute just in case price moves rather aggressively here. All right, buy side here, sell side here. All right, well, I mean, we kind of got what we were looking for. We didn't run as deep as we would have wanted to see. Oh my. Look at that. 30 handles in an instant. So we did run that sell side first, right? We were looking for a deeper run, but we just ran all these equal lows here. So we ran the sell side quick. Blast right up and through. Hold on, we need to go to an hourly. We're moving quick. Where are we at? Let's go to a daily. So we've actually pushed up and through the volume imbalance. We've pushed up and through. Okay. And we've gotten above the daily fair value gap. Here. So very bullish still. 1 hour. This is the daily volume imbalance. We've gone right through all of that. Oh yeah, pumping. Well, let's see then. We have targets. So this is the daily volume imbalance. We got a 1 hour here. And then we got external range liquidity, September 20th. The fact that we completely cleared that fair value gap, I mean, we're just going to keep pumping, to be honest. We might get up into this buy side here. Right, notice if people are trying to go long here, that's what this move is. Say someone got lucky, because we did get a setup formed here off of the new week opening gap, right? Inversion level. Stop below the swing low. So say you got in here nice trying to hold that. That's what this move is. Not letting anyone take place. We wipe out all the long sellers, and then we absolute blast to clear anyone that was trying to short. And right now, right, as we say, we're reaching into the 1 hour. Quick hesitation there. We see that reaction. Wouldn't be surprised to see price get up and through it. But really, this is why I like to watch the CPI, just to kind of see what liquidity gets interacted with. But then as far as trading, right, I'm not trying to do nothing until really the afternoon. Just because now we have this huge fair value gap here, right? So let's say we were even trying to take a play. Where would we try to enter on this fair value gap? Right, it's too large to just try to enter on it solely. Our stop would be, I mean, gigantic. It's too much of a risk to try to now cut the stop, right? Saying price won't return deep into it. So for us, we just like to let price play out, right? As we have all day price action in here, it's bound to refill some inefficiencies, give us some new setups, and then we'll have a better understanding of what price wants to do. Initially though, I think we're still bullish, right? We're holding that same sentiment, holding that same bias that we've been having the past 2 weeks of higher prices. We're not trying to call tops, right? Anyone that's been trying to call tops has been getting ripped, right? All the way back here. Trying to sell relative equal highs, we rip that, right? Relative equal highs, we rip through that. Same thing here, relative equal highs. I was honestly kind of looking for this delivery here. So let me hide this so it's easier to see. Right, so you see how we made 1, 2, 3 highs, sell side, cleared the sell side to continue. That's really what I looked for here. So we made those 1, 2, 3 highs. I was trying to see if we couldn't clear this low into this inefficiency. Kind of like, right, we cleared this low into this inefficiency here. So just looking for that same delivery. But instead, we actually just get a quick run lower. We still hold the actual fair value gap that's right here. Right, holding the new week opening gap as well. And now notice how we're getting that kind of reaction off the 1 hour we had here. Interesting reaction there. So we dig up right into that 1 hour. As of now, it's offering slight resistance, right? We can hesitate here and then blast through it. But if we get back into this daily now, I'd want to see if that would hold us. The fact that we went up through it so aggressively. Consequent encroachment of the large fair value gap is underneath. So really, we can hit the low of that daily. But if we start venturing lower than that, we might need to refill in the whole gap here. Because this is going to be when we open up at 9:30, right? Depending on where we are, of course. We're here now at 44.76. Let's say we even stay above the daily fair value gap, 44.62. Well, now at 9:30, that opening, we're going to have a huge opening range gap here. Goddamn. That is crazy though. In one swing, let's see, what was that actual move? From high to low, basically 50 handles in one candle. Quite the range. And that is one good thing about CPI, I'll be honest, is that usually if we can capitalize on a move in the afternoon, because the range is already so large, it tends to give us, right, just a nice range to aim for. Small range here on Monday and Tuesday, leading into this large range. Okay. So we'll hang out a little bit longer, but I really just wanted to see what we did off the opening. Yeah, we hold that. That's nice. Clear the low. Wow. Quickly. And honestly, with such a large fair value gap, what we do is kind of break it down. So just pull up the anatomy of it. That way we have at least some type of level that we can look for within it. All right, so we'll keep that there. Move this 1 minute. At this point, honestly, with how we've delivered here, I really wouldn't want to see this 1 hourly be hit now. So back to the 1 hour here, where ideally we wanted to see if we can get into there, falling short. Now with this aggressive move, if we were to kind of revisit this area, that'd have me a little worried that price wants to continue lower. So in my mind, this might become a breakaway gap here. Potentially even a measuring, let's see, from low. Right, gap. 1, 2, 3, okay. So notice how if we were going to utilize this as a measuring gap, and right, what the measuring gap is if a fair value gap that gets left open in the middle of a range, you can take the low to the start of that, project it out, and give you targets. So if you notice, right, I took the low, swing low, to the opening of the bullish. 1 standard deviation was the previous day's high, and look at how we hit that level. Right, consolidate, 2nd standard deviation here. We've gotten through. And now that 3rd standard deviation aligns with buy side. So that's kind of what I'm looking for just when I'm doing these projections. Seeing if there's any projections that align with already predetermined liquidity. And the fact that that 3rd standard deviation, much like the first one, right, is right near that buy side pool here. So it's right near this one. Makes me think that if price wants to remain bullish, that we're going to be reaching for that high here. In the short term, obviously, we can get a retracement. It'd be honestly more favorable if we did get a retracement into here first. So kind of continuing to engineer, right? Because we got to think there's always new people coming in here. Someone, if we start selling off on this high, someone's going to be trying to short that. So we could engineer short-term liquidity above this high, give us a retracement into the fair value gap, still expand. If we're extremely bullish, right, we're going to hold the most recent discount, which is here. And we're actually not even hitting the body's consequent encroachment, which is interesting. If we keep hovering away from that, we might actually just get above it. But yeah, CPI. Danger. Here we go. Gap. So we've actually got back above it there. So I'm honestly interested to see if we want to just run from here. Right, these candle bodies not even being able to get back into the consequent encroachment, getting back above. We could obviously still revisit that, but interested to see if we use the highest support quickly. Save as 1 minute. And we left a fair value gap as we left it as well. Kind of what I was looking for. So as we leave, let me make this perfect. So right, we hit it as we're leaving it. Fair value gap created. That's kind of a signature we would see if we were going to remain bullish. Yeah, I can do it right now, Carrie. We're really not doing much. No trade, but right, so if you're trying to sync your drawings, you need to go up here. Wait, I lied. You need to go. Wait. Damn, I don't know. Hold up. I was like, how did I do it? You need to go. Let me think. Okay, that's if you have two separate ones. If we're gonna sync the drawings. Oh my gosh. Honestly, I think you have, so like when you have the multiple charts open, are they the same layout? Right, so if you look up here, right, this says clean copy 2. And I have a few different layouts here. So you have to make sure, for one, that all of the layouts are on the same, basically, layout. Next, if I can kind of show you quickly here. Let me do it like this. Oh, I can share my actual screen. Okay. So if I share the actual just screen here, just to kind of show, right? And then we split that with this one. So in theory now, these are two separate screens that I have, right? Like this is usually on a monitor by itself, and so is this. But I'm just having it for the showing of it, right? They both have that clean copy 2, so they're the same template. And now as I draw on one, right, it should transfer into, like if I drag this fair value gap out, it should drag this one out as well. Whoa. Oh, but it's not right now. Damn, see, I don't know, I guess what I'm doing. Well, you can name it whatever. That's just what I have it named as. You can name it really anything you would want. That's just the name for the save file I have. It's the link button on the left. Here. Ah, yep, there it is. I was like, I knew it was somewhere. Okay, bet. Smart man. This button right here. Right, so as long as you have the right layout, clean copy 2, any drawing you make will sync to all of the charts. So if I like bring it back, so like these two both share it, and as I said, as I drag this around, the top one would change It's a little slow. But usually, right, both of the drawings. Yeah, so as I change that one, right, this one moves. If I was to kind of add like a trend line or something, it should change as well. Maybe if I could draw. Oh my. Oh, I gotta use this one. That's why. So it's a little delayed at times, but usually, right, it'll add and sync the charts across the two layouts for me. All right, there we go. Fixed it. Look at that. Oh, and now it pops up. Makes sense. Cool. Thanks, Vin. Appreciate you. But yeah, honestly, that's a sick feature. I use that all the time because then it allows you, as I'm analyzing a daily chart over here, right? You can see my cursor moving to the actual 1 minute levels, which is nice. And then if I bring it all the way over here on the actual chart, just not getting drawings transferred. So for that, it is kind of slow sometimes, which I don't know why. Just not getting, yeah, that's interesting then, if your drawings aren't getting. The only thing, yeah, I could recommend is to be sure that you have the same layout open. So I'm not sure what your layouts are called, but like you can be on the same chart, but if the actual layouts up here are different, the cursor will still move, but the drawings won't be replicated onto them. But all right, just chilling at this point. I figured I'll let you guys know now. I'm actually going to be opening up a free section in the Discord. Right, so I wouldn't worry too much. Not really going to get much access, but I figured if I'm trying to build a little community here, I could add a free section, which will just kind of be, it'll just be like a general chat. I'll probably share my liquidity targets in the morning, right? So I won't be sharing, obviously I won't be live streaming for them like I do with y'all. But like, kind of like we do, right? In the morning, I'll take a little screenshot of what I think the liquidity that will be interacted for the day is. So it just gives them a target. And then every now and then, I'll probably do like one free live stream a week. So for the most part, everything will still be in this channel. But then, right, once a week, we'll have one where anyone that's in the Discord could actually join it and watch. And look what's happening here, right? So notice how once we wick into that, like we said, if we're going to be bullish, these signatures tend to hold. We wick into the low and notice how we close above it. And this is what we speak about, where if we are bullish, this fair value gap is balanced. This low should be protected. So now this candle runs into the consequent encroachment, holds the actual low, and now we're starting to move away. Hitting the rejection block, so we might not get above that high. See if the volume imbalance holds us, right? New discount. And then look if we can't get into the 1 hour fair value gap. Aye. Not brisk. Bad timing. We're just about to leave, brother. That's funny. He said, oh, it's all right. We'll be back for the opening. I'm kind of just following this little short-term delivery here. But like, let's say that obviously this was a setup here that we saw. Now, I'm not one that's kind of risking this. But if you were a little more ambitious, right, it'd be perfectly reasonable for you to enter using that fair value gap with the stop underneath the candles here. And now if you're already aiming for 5 handles, right, we've already got that. Into the fair value gap gives you 7. Volume imbalance has held us. Let's say we even did that. The 2 handle stop as usual. 5 handles would need to get us here. See if that holds. And this is also why I like CPI, right? As I mentioned, it has large ranges. So since we've already kind of predetermined and established, we're gonna have a huge range here. It's pretty easy to capture 5 handles, right? Because you're not needing that much movement in price relative to the range that it's within. So right there, right, that's about to be another 5 already off of the discount here. We can continue to follow it, honestly. Like say we did that off the new, right? So there's 5 into the high. Yeah, right. You got it right there, 10-10. So we'd keep the same schedule we have here, but instead of it being all private, one of the streams that I do during the week will just be a free one. So anyone that's in the Discord could join that. What was the fair value gap above you that you showed? This fair value gap here is the 1 hour. No, we're up and through that. So that was a clean setup there. All right, go to an hourly, scroll to the left. Last fair value gap here before the swing high. So that's what I'm taking. All right, because now if we get above that hourly here, should reach into the swing high, which aligns with the 3rd standard deviation of this potential measuring gap here. So we would look for that. Closing above consequent encroachment signifies, to me at least, that we actually do want to get to the high of that. So we'd look for a retracement. I'm still looking at volume imbalance paired with fair value gap here like this. See if we wouldn't hold from there, get above into the high of that. Gonna prep some ribs. This man really is the brisket king. Hey, that's fair. He said, I'm about that money. Only for the food, though. Slow roasted ribs. I like ribs, to be honest. I don't get them much where I'm from here, but we got some barbecue smoke trucks that I'll be going to. If they're done right. Some be so dry, though, you know what I mean? Overcooked, does it be dry as shit? Like, damn. What a waste. Beef ribs. See, I don't even know the difference between beef ribs, pork ribs. Beef sounds better. I'll give you that. I'm a beef fan. Two-minute FFA got volume imbalance too, so yeah, I'd look for that, to be honest. Crazy. Potential order block here. If we're to get above this down close candle, we may not even return into this fair value gap here. But yeah, all right, fellas, we're gonna go ahead and just step away for a little bit. All right, we're not really looking to trade this morning anyways, but what we'll do, gonna get something to eat, relax a little before the actual 9:30 opening. So we'll be back just before that 9:30 opening. We don't really expect much volatility. So on days with CPI, and in general, if we have like an 8:30 high impact news and price moves aggressively, that 9:30 open tends to be a little more docile, right? Not as aggressive, just because we've already had such a volatile opening. So seeing this huge gap, I wouldn't expect much from the 9:30 opening, but we'll hang out and watch that probably till just about 10 o'clock. And then we'll call it a morning, come back in the afternoon, see what we can get. But for now, I'll leave this up here just so you can see price print if you're still kind of have the stream open. Let me, as usual, let people know in case they're joining. Gone till 9. We'll say 9:25. Gone till 9:25. If we're watching in here, I still would want to see if that 1 minute, we never hit the consequent encroachment of it, so we could run all these lows out, still hold. But if we get above this 1 hour, I'd start looking for that. Hopefully it doesn't happen until we get back, but if it does, that's fine. So we'll leave these levels here. Daily fair value gap, got the 1 minute. And now you got the hourly we're inside of. Yeah, we'll leave you with this. Won't be gone too long, but yeah, I'll see you guys in about half an hour or so. Until then, take care, everybody. Talk shortly. We back. Just in time. What's up, fellas? Morning, CY. What's up? Let's see. So far, we've just been playing inside that still. Haven't came for the high. Wait, did we? Nope, never broke it. Yeah, we'll see what 9:30 does. If 9:30 is still lackluster, like we mentioned, our main focus during CPI is always the afternoon. We'll let the first half hour play out here just to see if it does want to give us anything, but for the most part, we might consolidate for a bit. And I want you to really notice that difference, right? So 9:30 just happened right now. Usually, right, we're seeing price kind of move in some type of direction. Look at how slow price is moving here, right? No volatility, no kind of hurry to get anywhere. And that's because we've already had a huge expansion. So just something to note in the future, that if we move aggressively before the 9:30 opening tends to be lackluster. We'll see if we can't get above and give us some type of potential setup here. So we still like the fair value gap high. We still like the swing point here. We've just ran this high though, so we need to be careful. Maybe a Judas swing. Short-term high cleared. What I would look for now is, let's see, we're holding over 2 minutes. I'm not really holding any fair value gap either. Yeah, we'll see. What's up? I'm weak. He said that is not my job. Shit, I bet you changed so much diapers, brother. Like, I'll be honest, when we have a kid, I'm getting myself some black rubber gloves. Every time I gotta change a diaper, they getting put on. I ain't touching doo-doo. So still, right, we keep trying to get up there, but holding consequent encroachment, holding the high, wicking it. Makes me think we want to reverse. If we're gonna hold like that. Well, there we go. Let's say that we leave the 1 hour here. We might actually get an opportunity to ride it short into potential discounts here. Especially if we break below the 5 minute, right? So like I mentioned, holding the bodies here indicating to me that we kind of probably want to go lower. Let's go to a 5 minute quick. We held this 5 minute originally, so if we get underneath it, notice how the bodies hold the low. We're gonna get back underneath that, and there's no inefficiencies in here until the 1 minute. We could probably look for that. But as of now, really just consolidating. So you see how this 9:30 opening following a large range is pretty just choppy. And that's why we tend to ignore the morning completely. Obviously, I'm hanging out here with y'all this morning, but our main focus will be power hour in the afternoon. You can come back probably like 1:30. If you're someone that likes the afternoon, I'd start looking at 1:30. For me, I like waiting until 3, but 1:30 will give good setups a lot of the time as well. Hey, I'm glad you like it, dog. I just wish I could control. I mean, you guys can control the volume, but it's good, I guess, since then. I'm just not sure how loud it is for y'all. Ooh, I kind of want to try. Let's try a paper trade buy. We'll just go 5 handles quick. I just want to see if, since we're getting back above, notice we close above it for the first time, and we're creating a volume imbalance. So just trying to use a volume imbalance entry here, stop below the candle that creates it, targeting 5 handles. Almost like a 1-to-1 type of thing. Especially if we can get above this high. So we left it open so we can go ahead and leave this entry on. Right, with that volume imbalance entry, if it closes, we close the position. But since it got left open, we can go ahead and see if we can't get something here. Obviously, very low risk. That's why we're papering it. As I've stated, not really trying to get anything until the afternoon. Price tends to chop here. Just want to see if we respect bullish. And we don't, right? So come right back down. Notice we're still inside here, so yeah. Back and forth, back and forth. And this is why just not a fan of the mornings. Might still bounce from here. We just keep returning to that 5 minute here, right? If I show you. So like what you really could do, say you did want to be aggressive. If I'm looking for an actual entry, right, this is the only one I would try to even take. When price is choppy like this, that's kind of when I rely on higher time frame structure. So we can use that as a little teaching point as well. That ideally, right, if we're actually kind of in bullish markets, if we're trusting price action, I'm okay entering on this. But in these type of mornings when we're choppy like this, I tend to rely on higher time frame discounts, right? So we would try to use the 5 minute, and stop would just have to go underneath the swing point on the 5 minute, right? Targeting your original entry or whatever it would be here. Since we can't be as precise because the 1 minute is obviously chopping here. Perfect volume. Cool. So usually for me, rejection blocks I like to use as targets. I'm not someone that necessarily enters on rejection blocks, right? Because to be honest, I'm not one of my favorite PD arrays. I haven't spent as much time trying to master that one, but I can still notice them. So for me, I just use them as targets, right? So I like to take consequent encroachment of them. Like let's say that we got short, or excuse me, say that we got long, like somewhere down here or something like that, right? And we're creating rejection blocks. I'll just use that to partial out or target. So as we hit consequent encroachment, I reckon I wouldn't touch it now. Price, yeah, I would wait, brother. If you're actually, if that's what you mean, price action, you could paper it. I'm all for paper if you're trying to play around, but never risking real capital. 5 minutes holding us. I'm just kind of looking at this as how we've wicked lower. In reality, we should have used the candle low here as our stop, not this one. In choppy markets, price will tend to do that. We've actually closed above it now here. We may go in. Say we leave a fair value gap right here. We may try again. But we might, now that we've closed above, just run. Notice how we close above the old high. Now we tap that level perfectly. So yeah, we'll see if there's a fair value gap that gets left there. Getting above the rejection, right? If we close above, obviously still higher prices. You cannot get DJ permissions. Nope, you have to go, right? You're not in the actual volume down. That's funny, people. You have to, so look on the left-hand side. Let me show you actually, like this. Because people tend to ask quite a bit. Oh wait, I can't show you. Can I? Maybe. Oh, okay, there we go. So let me change the screen just to show you guys how, if you can't get the music working, here's what you got to do, right? You go, green bot right here, the one that's playing, this guy, green bot 5, right click. It'll pull up the user volume, right? And from there, that's what you have to use. So if it's too loud, you can go all the way to 0. If you don't want to hear it at all, you can play with it. 10% and see what that does. For now, I keep mine at 50. So we did leave that fair value gap. We'll try one more entry this morning on that. So old high paired with fair value gap. Like we should, right? In theory, we should go stop below the swing low, which is huge. I don't really like that at all. Projection there. You can go up a little bit then. Random. Okay. He said, I'm not trying to hear the baby. You're got me weak. Depends. You got a certain brand in mind? I like those Sonys. That's kind of what I would rock. The 1000 XM5s. Got a pair of those. I was gonna say, yeah, the Sony. If you're going that, I'd check out the 1000X. I mean, it depends on your budget too. Those are like the top of the line ones, but nice. So far, that's playing out well. Honestly, we could probably even go. Should we aim for 10 handles? Nah, we're about to hit that. We can aim for 10 handles. That'd put us in. Let me see what we got over here on the left. There's a swing high right here at 4,500. I like that, a big round number. So what we'll do, we'll go 4,500. Partial though at 5 handles. So 1. Bang. Looking for that 5 handle partial. Break even. New fair value gap we've left. Add one maybe. Right there. Original 5 handle partial still there. Stop below the swing point where we entered on originally. Fair value gap should be balanced, which means no need to return below that if we're bullish. Fair value gap here should hold as it's paired with our 1 hour. So yeah, we're looking at that. Oh, waiting for that sell. Cool. So those partial still break even. Or not. Okay. Maybe we go another partial 5 handles from here. Oh, which we're at right now. So we'll partial one more there in the position that we added. All right, so we should be able to get this here, as I'm mentioning, is our, let's go to a 15 real quick. Boom, zoom out. All right, I'm looking at this high here. We got equal highs here, sitting at a big figure, 45 hundo. I like that as a target. Oh my gosh, brother, how far we gotta go? There it is. Oh, chill out. What are we doing? Bang, bang. Like that. Zoom in. We back. So we got a target there. Bullish delivery. Right, using the old high. Closed out both. So now we chill. Final target. When did you get in? Right now, right there. Fair value gap paired with old high as we break above consequent encroachment, closing above the old high, closing above a swing point. Let me chill out. Going too fast. But no, right, I'm just simply reading that order flow. So this is the 5 minute down here. We're stabbing into that once, right? Notice, as I often say, look how the candle bodies are hovering above that level. So when I see something like that, wicking lower, but the body's actually refusing, right? Look at that precision here. Body's refusing to tap that level because why? Let me drag it to the left, left, left. Bang. Volume imbalance, okay? So we're holding the volume imbalance above the 5 minute. I notice how we create now an intermediate swing low here. Higher swing low to the left, higher swing low to the right. So this low should be protected. It's hit the consequent encroachment of the 5 minute. We're now moving away, right? At the same time, we've cleared sell side. So we've cleared sell side. While also, right, see how we can overlap these. We're returning into an inefficiency. We're clearing sell side. We're holding the 5 minute. Here we obviously get played out, right? We should have kept the stop below the swing point. That's just user error here. If we kept it under structure, we'd be safe. But because we have it tight, we get one more wick out. But then we're still not abandoning the idea because we're still holding these discounts. So now once we break above consequent encroachment again, Notice how this one is different in the fact that here, no closure above the old high. This candle is the first candle to close above the old high. Lo and behold, while it does it, it leaves the fair value gap, not random in one instance, right? And that's why we enter on that. We're leaving behind a discount as we're going through a premium. We have higher targets, obvious entry. Same thing here. We've wicked into a discount. We're now leaving a higher time frame discount while creating a new fair value gap. Easy stacking entry there. And to be honest, like say price came into this fair value gap, I wouldn't mind trying to add one there as well. If price came into this before our target was met, we could probably add another one here. Which I guess we'll try that just to kind of prove a point here. If we're wrong, we'll still be able to get stopped probably in profit. So let's try this out. We'll try to add one more here. If price wants to run back into that. Oh yeah, see why the 1000 XMs, yeah. You can get them for about they say 400, but a lot of places you can get them like 350, 300 for a deal. Oh, the 1 hour fair value gap. Do we need to wait for one? So yeah, so as I often say, well, wait, let me just wait. Cool. So clean delivery, and notice how we don't even get back into that. And here's what we do speak of. So since we've hit sell side now, right, we've fully been out. If we want to continue bullish, we can actually, like, right, if we have this target, we can actually now return into the untouched discount, hold here, and continue. But I mean, give me a swing high exit though. That's all I'm asking for. You know how we be. But watch here, right? We could touch that. So now if you're extremely bullish, that's another buying opportunity. But for me, right, these ones are a little higher risk just because you have to be very confident that price wants to run higher. If this price would have closed above the high, I'd be more confident. The fact that we wick like this, I'm not as confident. And honestly, I don't want this high broken so we could exit on that swing high. Swing low to swing high would be filthy. But yeah, tan for the hourly, okay? This is where it gets tough though, because we're using 1 minute order flow. We understand that the concepts were overlapped, time frames were overlapped. So on the 1 minute, I'm fine using this because we've closed above the 1 hour. But this is just for the short-term targets of here, right? So for us to really confirm this 1 hour, we do need to wait for this candlestick to close. Now, if this candlestick can close, we have 10 minutes. If this candlestick closes above the 1 hour, we've now confirmed the 1 hour inversion. And at that point is when we can get a deeper retracement, right? So we can kind of play here for a little bit. We can play around here for the next 10 minutes, right? Let's say that we want to do that. Play here for the next 10 minutes, close above, and then return into the hourly and still find support and run higher. I like how I respected the 9:16 a.m. fair value gap 1 minute. Here, yep, right there. Good eye. Then I executed on 9:36 down close candle. Yep, not bad into the 5 minute. Right, returning into the 5 minute as we noticed. Using higher time frame discount paired with lower time frame understanding, clean. Very clean. Exited on the swing high. So once again, swing lows caught, swing highs exited on. You cannot time the market, they say. Doubt it. But just as we expected here, honestly, right? So notice, look how the candle bodies, right? We're kind of reading the candle bodies. If that would have stayed open, that would have been a little bit more important. It gets closed. I'm interested to see what we do here. But candle bodies hovering above that consequent encroachment, to me, indicates if this, especially if this bearish volume imbalance gets completely negated, indicates higher prices again. Right, on our 2 minute, we got, that's actually a 2 minute as well. So yeah, this would be a good area to hold price. And as we spoke about, right, only after hitting buy side do we return into it. And now we would look for delivery again into the high. Like honestly, we could have probably tried the long right there. Stop under the fair value gap for this target here. If that closes, it'd be a closed position as the aggressive volume imbalance entry. Pound down. Worked into buy side liquidity. Yeah, we're looking for that buy side, honestly. Oh, you're saying on the actual, yeah. That is where we do get some discrepancies, to be honest. So I think you're referencing the actual, like, easy, or... Let me see, where's it at? Easy. Worked into buy from 18th. I'm still not seeing that, actually. On the 18th. Buy side here on the 18th is at 45.15. Huh. Yeah, I'm seeing something different there, brother. I'm on the ESZ chart right now, but I'm looking at it. Monday, September 18th. High of that day is 45.15. Aye. Let me see if we have our new week opening gaps though. Oh, we've hit the August one. August. Any in May? No. The 17th, okay. Yeah, that makes sense. 17th. I mean, we had equal highs at 45.07. No, just what, brother? You gotta be lying to me. Let me check. Let me just check that. Let me go. All right, if you're looking at September, the 31st of September. Right, so we're here. If you're looking at this day, 17th and the 18th, we got buy side here, 45.14. We do have equal highs here, if that's what you're referencing from Sunday. Right, but that's this high as well. So these are kind of the same high. And we haven't actually got up there in either of them yet. Still short. We've wicked into, right, that high we were looking at, but that's about it. New week opening gap here. Oh yeah, okay, the new week opening gap, yeah. From here, from the close here to the open there. So even though it's tiny, it's inside of this one. Right, which is why I have that one up, but we could put that up there as well. Baby new week opening gap there. Now if we went back to that 1 minute. Right, notice how we've hit the high of the August, but this is the one we just labeled there. Into that as support. Should deliver higher. I wonder if I could actually, how late can these new opening gaps go here? I could put, hella damn, I could put the past, well, usually I like to use the past 2 months. We'll do 10 weeks though. Extend it to the right. What does that look like if we do that? You're lying to me, brother. You show no. Oh, it's loading. Okay. Oh, new date? No, I don't want that. I don't want that. See, I'm clunky with these indicators. I thought I did new week opening gap. Oh no, goofy ass. Let's try longs again. Above new week opening gap here. On new week opening gap, stop under it. Into final target. Oh, you don't. Sorry, biker. Yeah, I said. There you go, Ergon. You got it. For anyone wondering about the music, you have to actually adjust the green by itself, not the buttons in the chat. And then it'll always keep that same volume. So regardless of what music is playing. I wish I could pin that. Oh, look at these emojis we have. What the heck? I didn't even know that. So there's a fair value gap there as well too. I like that. So notice how we create that. Maybe we'll just use that. That'd be what? 4502 big figure. I'm fine with that. So we'll go like that. Stop under this swing point here at this point. Targeting up there. Oh, you're gonna run. Okay. If we deliver into this target this morning, we might be out of luck for power hour, to be honest. I was kind of hoping that that was the target. So I was really expecting a retracement first before we get there, but we're just moving there right now. That's fine. Still participating. Might be a mistrade opportunity here. We should use the volume imbalance on the 2 minute. That one slipped me. Slipped my attention there on that 2 minute. And at this point, I don't want to use, like, if we have this fair value gap here, not necessarily not trying to use that, to be honest, just because it's pretty, let's see, 5 handles. If we can get in at 4503 and a quarter, we're just going to run straight for that. We're going to get up and into that. If we get into that, right, we're about to clear the daily highs we're looking at. Man, we are bullish. We're just ripping the faces off of anyone trying to short. Hey, we're fine with that, though. We could take advantage. But yeah, at this point, we're already so far up that, I mean, we could aim for the daily swing point, right, which is at 45.15. I do actually, yeah. So like, to be honest, I had this one here set in my actual account, but you notice we never got into it, which is unfortunate, and just targeted. So this is an actual mistrade and a paper mistrade as well. That's all right. As I often say, right, there's plenty of opportunities. I'm never upset about missing one. I just like to see price deliver as we expect. That's really all I'm looking for at the end of the day. And we deliver right into that level. Look at that way. We sit right there. I love seeing that. Wicks, but body's holding it perfectly. So missed opportunity there. We've reached now our target we were looking for. So we may continue, honestly. Let me go back to that hourly. Right, we were looking for here. We can now go here. Like this. And then we could even go here. So this is a new week opening gap from September 8th. If we can get above that, we have more upward potential. So what we can try actually now, so just like we spoke about here, after hitting buy side, we can go into untouched inefficiencies and find support there. Right, we get that here. I'll kind of see if we want to do that here now on this 2 minute. So we've hit the buy side. Let's see if we can't come into this inefficiency before continuing up. Only issue is we have a few, right? So we have the volume imbalance here. I would like a deeper retracement into this, but we may actually just hold here and continue to go. I'm confused. No, I didn't get in. I mean, we got in. These, you saw the trades we took here. Right, so these are the entries. Carry, or what do you... Yeah, these are the entries here. That's all we've done. If you're confused, I don't share my actual entries, if that's what you're wondering. Like, I'm taking my account because I'm not a financial advisor, and that would be a signal service. Paper is the best you get. Oh, okay, yeah. I tried to. Like, I had a limit order here with my real account, trying to capture that one. But as you saw, right, we actually don't even return it into it. We tap it perfectly, don't get tapped in, and we ran straight to our target. So I was trying to, but right, I missed this one. So these were the only ones that we actually took. Yeah, the measuring gap is just right, so let's go back. The measuring gap is a projection tool that can tell you how far price is willing to reach if we continue to run. Right, so we were using the 1 hour here. Now what we do is we take the lowest low, right, up to a fair value gap. So ideally as well, let me kind of clear some of this. Clear this fair value gap, clear that entry. We have a lot going on down here. Let me just hide this for now. Okay. So with the measuring gap, what you want to do, right, it's more of a measuring tool. You can't really enter off of it because it's not going to give you an opportunity. Most often they're followed by breakaway gaps, right? So we like to see that we have a 1 hour here. This has become a breakaway gap, price never returns into it. So now when we form this one, right, we're using it as a measuring gap to tell us how far can price reach. So what we do there is we take the swing low, right, the lowest low, into the start of that fair value gap. So where it begins, right? And that begins once this candle closes, that's the low of that fair value gap. So if we take this and now we throw projections on it, right, it'll give us areas that price algorithmically should reach for if we're bullish. And as you saw, right, once this was formed, notice how we hit that first one, but it's also the buy side pull. So this is what we want to look for. You want to look for projections that are lining up with already predetermined. It could be liquidity or it could be an inefficiency. Any reason that price would want to go up. So right, you see at the first one, buy side. Second one, we get right through. Third one, notice there, right, we have that buy side as well. So we're looking for this buy side to be hit. we've fallen. I mean, we're like one tick below the actual deviation, which is why I'd still like to see price get up there, especially getting above now this old high. But yeah, it just gives you, right, if you're unsure of what to aim for, that's kind of what that'll give you. There should be a breakaway gap first, and then that measuring gap second. Measuring gaps usually form about halfway between the move. So this was the original move, but since we're still bullish, we can use it to kind of project out and onwards. Let's go back now. So we get right through that, actually. Interesting. After hitting that buy side. And that was our final target. Oh man, I love price. Look at that. Absolutely delivers right to our target. And this is what I mean when I say I'm fine missing the trade. Okay, so we weren't able to take part or participate here. But just seeing how precise, right, our analysis is, that's all I can ask for, really. Right, we hit that level perfect. Candle bodies, not one tick above, not sure we wick higher, but I'm almost interested to see what this does here now. Because now we could probably actually, I want to see what we do there. Back above this, obviously this becomes an inversion, gives us a discount to use to target higher prices here. Right, I'm going with this as our final, or let me go to that daily chart actually. So yeah, right, we have a daily high here. That would be the final target because there's a daily fair value gap right there as well. Like these. Daily fair value gap. Whoa, way too far. Back-to-back volume imbalances going into that fair value gap. Potential indication of bullish order flow. If we get above it, especially because this fair value gap was the negated bullish, completely turned bearish. So as we often speak of, in true kind of, let me think what I want to say. So let's say if the market truly was bearish, right, signatures like this should hold up. Where if we're negating a bullish volume imbalance with no wick at all and completely running lower, creating a new premium in the form of this fair value gap, this fair value gap should hold us if we want to continue lower. So if this gives up way and we get back above it, I'd actually be comfortable using that as a potential inversion entry, especially if we left it forming a new discount to now target right here and then ultimately that daily. But let's see what we get. What's popping? Brand new whip just hopped in. I got options. So if we left it above and came back down to CE entry. Yep. I'd be cool with that. Especially say now that we have a down close candle aligned with that, right? If we were to expand up and through, we close above. Especially say we left now another discount. Like if we came back quickly, right, left a fair value gap there, I'd look to enter on that. The run of the low, the return into the fair value gap, into the down close candle. and then say we left again, I'd look to enter at the high of their fair value gap and just keep stacking at that point. Whoa, 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 whoa. Chill out, chill out. Has to get up there first. Right, we could obviously hold this bearishly. Let's see what a 2 minute. 2 minutes holding. Yeah, 2 minutes holding consequent encroachment. This is actually a balanced price range right here. We've created a bullish fair value gap. We completely negate it with the exact same fair value gap going lower. Notice that. Up, pass down through. So when I see something like this, actually, if we were to get back above it, that even reinforces the idea that this should hold us for higher prices. We're getting squished between this now, the volume imbalance and the premium fair value gap. So let's see which wants to give way. We do have one here actually as well. This is the 2 minute. This one here is the actual 1 minute though. Like these. And we've actually hit that perfectly. So yeah, if we were to get up through that, yeah, especially with that. I mean, look how those overlap one another. Oh my goodness. Big stretch. Mango, come here. Hi. Hello, little miss. No biting. So even though the 1 minute's here, I'm overlapping the 2 minute because I'm using that. Right, so this is the actual 2 minute here. I gotta add a new thing. Midline, bang, bang, black, boom, template, save as, 2 minute, fair value gap. Wait, text, 12, bold, template, now, 2, bang, bang, bang. Yes. It was already 10:15. What the hell? I said I was gonna be gone at 10. Classic. It's like once I start, I just can't leave. I want to see that print. Here's what we'll do. If we get above, right, if we deliver here, we're done. If we get under this low, we're done. I really just want to see which way we go. And then we'll come back for power hour. But now, closing above the 2 minute consequent encroachment, we may be able to use that. So let's see here though, right? We've just ran this high. I want to see if we can close above, like if we can close above the high, closing above the 2 minute, we could probably go like an aggressive tape read entry. Let's see. Man, I'm yawning so much. SMT? Is that a question? What is SMT? Okay. Notice how we left that right there. That's rather interesting, actually. We're gapping the 2-minute consequent encroachment. So if we can close above, oh, we do. Let's try that. We'll try one more before we head out for the morning. Chill out. Oh my gosh, I'm too slow. No. What are we doing? Nah, give us one more tap, brother. No way we're missing that. I mean, honestly, if we leave a fair value gap there, that's exactly what we were looking for, right? Leaving the inversion while engineering a new discount. My only issue is we're going to go in with 1 here. Just in case we want a volume balance entry that. We'll go in with 1. Because I want to build a position still. So if we run from here, we can be involved. I still want to add most though at the actual here. So we're going to see if price can't get into that. And then from there, we could probably go 5 handles, but our actual target's up here. What's up? You headed out? Okay. Yeah, just let me know. Love you. Oh my. Yeah, say goodbye. And we get stopped. That's fine with me. Might still use this one. All right, we're obviously in a huge, we'll say, premium at this point, right? We've been moving the whole time. As we often say, this entry here, right? I kind of teach about it a lot, speak about it a lot. This entry is a little bit higher risk because we have already delivered into a target and we're at the extension of the range. Whereas when we're in here, right, we always like entering towards the middle of the move because we still have a target to reach for. Whereas when we actually hit that target, right, these ones just become a little bit lower probability because we can continue to run, right? Or we can consolidate for a little bit, or we can reverse. Whereas in here, right, there's very little chance of us reversing if we've already broken above the old premium, right? So now we're engineering a new move. We're capturing the middle of that move into the target. Done for the day. Hey, take care, brisket. We'll be back for power hour. Right, we'll wrap this one up here too as well, everybody. Appreciate y'all sitting in quickly. Right, if we want to continue looking, I still like higher prices, honestly. So I would still look for those higher prices. If we get something like this 15-minute here, we can come back into that. I want to talk about, remember that hourly we spoke of? So closing above here, we've now created this as an inversion. So in reality, I could even see price coming back into this and still holding. But we'll just need to see what we get in between now and power hour. Power hour is at 3 to 4, right? So we'll come back at 3 o'clock. That's why I like trading this little time frame here from 3 up until about 350. That's not the right line. We'll just say to 4. So right, let price play out in here for a minute. Do whatever it has to do. Maybe come back down into these fair value gaps, play around. But we'll look for this little time window here to give us another opportunity. Obviously, if we haven't reached into this at that point, that'll be the target. But if we've already hit that, then we'll have to just reassess what we may want to do during power hour. But yeah, everybody, that'll be it for the morning. Hopefully you found something helpful, found it beneficial, right? We can see how, even though it's choppy, you can still trade CPI if you know what you're looking for. And to be honest, we might even, look, we're going to run from here, to be honest. So we use the low of the inversion. I had my stop at this swing low. Once again, with my trading style, I am a little more aggressive. If you would have kept it where the actual low is underneath the inversion is, right? So you would enter on the inversion, say. If you're comfortable with the wider stop, the swing low that's underneath the inversion is protected. So that's here. And we get close to it, but notice we never take it out. And now we're starting to move. So just per my style of having tighter stops, that's going to happen at time where I get taken out and price moves in our direction. That's fine. But notice we've hit that objective now to the tick. Beautiful delivery into it. And we reject. But yeah, I'll just look for continued high prices. Until then. Or I guess until we get here. That's what I'll be looking for. See, I'm trying to leave, but I always be getting stuck. I want to see what happens here. Fuck it. Doesn't matter. Doesn't matter. Yeah, we'll be gone, everybody. Let me make sure I have my announcement set for... Yep, all right, so we got the Power Hour live stream set up. Cool. So yeah, for those that'll be around this afternoon and that, I will see you then. Until then, be safe this morning if you're continuing to engage. And yeah, we'll talk shortly here in a few hours. See you, everybody.